Okay, it's time now for top picks from our guest Greg Dean. A&W is number one, a Canadian pick. A&W on the TSX.
Yeah, this was a throwback. They announced that they were buying out the general partnership interest or the operating company mid or late last year. This was historically traded as a 3% royalty on the operating company. It was basically like an old school income trust, depending on how far back people want to go. And that was never of interest to us because it was basically an income pass-through vehicle and not an operating business with growth. And so when this acquisition happened, we met the team. I think there's been 3 CEOs in 50 years of this company. It's been incredibly successful, but also very stable. And bringing together the operating business with the royalty interest, we think what many people don't realize is they now have the national rights to Pret-a-Manger, which if you've been in an A&W, you might know. They've rolled out their coffee across all of their stores. And so we think this is a business where you're getting, almost a 6% dividend yield and 10% top and bottom line growth, maybe 5% top line, 10% bottom line growth, which is fantastic. And it's one that we hold in our Canadian small cap portfolio.
So you're unconcerned about the decline in the share price under this new structure that's taken place so far? You think value is being unearthed here, do you?
I think there's a big transition in the shareholder base going on because people who used to own it because it was sort of like a GDP plus grower with a nice dividend, and now it's a lot riskier because it's an operating business. But with the risk comes, we think, a lot of upside from more units, same-store sales. Like there's a lot of other levers to grow this business that weren't available to the public company previously, and private equity plus the former management of this business probably still own 60%. So they're very incentivized to make sure that this company does continue to create value. So we feel good about the alignment there.
Okay, number 2, we're going to Tokyo for this one. BayCurrent in Tokyo.
Yeah, BayCurrent is basically an IT and strategy consulting firm based in Japan. It's a company we followed for a really long time, probably put our first dollar into the company in June of last year after following it for close to 5 years. And think of them as Japanese Accenture. They're actually growing faster than Accenture, have much higher margins than Accenture, and the founder still runs the business. And we think that there's, most people wouldn't know, but Japan is probably 15 to 20 years behind in terms of modernizing their IT infrastructure. So we see a lot of runway for them to continue growing revenue close to 20%. And we bought it at 15 times cash earnings, and it's probably low 20s cash earnings today, so more expensive, but still reasonable given the growth.
Okay, and we go from Japan to Norway for our final top pick today. SmartCraft ASA trades, it looks like it trades in Paris. Is that correct, Greg?
No, you were right, Norway.
Norway.
SMCRTNO is the ticker. So to that earlier question on Lumine, this would be one we'd much prefer people own instead. This is a 40 margin business. They reported this morning, I think margins are actually slightly below 40%. They're investing in replatforming some of their software solutions. But these are very low ticket items sold into the construction industry. So think of you're competing with pen and paper, Microsoft Excel, and offering $1 per module per month, $3 per module per month type solutions to help automate workflows within electricians, plumbers, and general construction. The CEO has done a fantastic job. This business should grow longer term, mid-teens, organic, plus M&A with a really strong margin and almost no debt. So there's a lot to like. It's one that we've held for almost 2 years in the portfolio and continue to buy more.
Greg, thanks a lot for being here with us today.
Thanks, Paul.
Greg Dean was our guest. Global small caps was his focus, and there are his top picks at the end of our program. A&W in Toronto, BayCurrent in Tokyo, and SmartCraft in Norway. Let's take a quick look at markets before we get ready for trading day here on BNN Bloomberg. There you see the S&P TSX Composite Index up by 1/3 of a percentage point to 25,646 points. Here's a look at U.S. markets. They are solidly in positive territory as well. The NASDAQ Composite leading the way with an advance of 0.8 of a percentage point. The S&P 500 with an advance of about 0.5 a percentage point. Here's crude oil. 71.25 is the price of crude, essentially break even from yesterday. Here's the U.S. dollar. All kinds of talk about the greenback with the new administration of Donald Trump in the White House. There you see the greenback continuing to slide a little bit versus that basket of international currencies known as the Dixie Index. And here is the Canadian dollar, which continues to trade just a little bit above, actually substantially above now, 70 cents US. It's almost at 70.25 cents US. Thanks for watching Market Call. We'll see you tomorrow on the show. In the meantime, Trading Days coming up next.